85 to 90% of our business comes from Latin America. Hence, I will start with the starting points of our business from Latin America. Let me list out the 7 things first. Number 1, simple generics. When we went to this part of the world, we never had an extraordinary technology. That's why we call it as simple generics. Number 2, ordinary people. When I say ordinary people, this includes the promoter, mediocre promoter with the low-key professional. That's how we went to this part of the world. Number 3, extraordinary physical risk. You are aware actually the kind of physical risk one has actually in this part of the world, because this is the Central America is the place where you have all kinds of drug trafficking. Number 4, unregulated markets that of course helped our registrations faster. Number 5, less expensive approach to manufacturing, which means most of our products are outsourced and we had one simple factory to manufacture the generics and export to Latin America. Number 6, differentiated business model. We never went to appoint a distributor there or importer. We went there actually and created a business model in the form of we not only manufacture and export, we also control and manage the import, distribution and the last mile, which really helped us to give the best price to the bottom of the pyramid. When we were in a position to give good quality, variety, novelty at the best price, which has created a stickiness factor among the BOP. Finally, fearless execution led to limitless possibilities. The lesson learned is if we are unwilling to risk the unusual, we would have settled for ordinary. Now we are on the way from ordinary to create an extraordinary status for Caplin Point. We are also aware that we can't simply subsidize our way to prosperity. Hence, let me first highlight some of our unique areas in a nutshell. Number 1, maximum business from minimum populations of Central America. You are aware that the best company from India does an export of $150 million in the bigger geographies of Latin America for formulations, whereas Caplin has exported $100 million worth of goods in the last year. And number 2, goods, people and promoter are close to the customer in Central America and other parts of Caribbean and South America, unlike other Indian and Chinese companies of our size. The outcome is the cash flow in the form of 180 crore in 180 days. Also, we have generated reasonably good profits and comfortably we are solvent. Number 3, unique geographical presence. There is Latin America, which you are aware, which is not very close to India and China. Hence, we had that unique geographical advantage. Here, the competition of our size, especially the company of our size, is still few and far between. Number 4, new market creation in addition to creating the market share in the existing markets. We are now moving to a well-diversified product portfolio with the help of the newfound R&D and R&A. Expansion to bigger geographies in Latin America such as Chile, Colombia, Peru, Mexico and Brazil in the coming years. This is how we turned around the company from 0 to 1. Otherwise, we would have remained as 0 forever. We always choose to take the road less traveled and make it as a high road for growth. We don't operate on the fringes of quality. As you are aware that there is no partial pregnancy. Similarly, there is no partial quality, trust or integrity. Hence, we have introduced the benchmarking behaviors in our manufacturing facilities. It is time to optimize our growth potential, understand the basic premise of learning everything. We need to know about strategic planning, what it is, why we need it, and how to implement it, which alone can get our company up for success in the coming years. Now, let me give you the list of activities that are people and product specific, also the market and manufacturing specific for future. The first one is the asset-light model to asset-heavy infrastructure from internal accruals. Here I mentioned the major one, which you also are aware, is our USFDA facility. You are aware that the US business is a 1,000-mile journey where we don't see many companies of our size from India and China. It is also true that the infrastructure, the investments in the capex and opex is instrumental for the dip in the ROC, ROCE and few other ratios. But I promise you, this is a dream destination, and there are very few Indian companies, especially other than the big companies, which are planning to enter into this biggest market of the world. And we are very close to reach the destination, and the revenue stream will increase, say 1 to 2 years from now, and I will also list out the reasons for it. Today, we don't do anything from scratch in our Caplin sterols. We do it from experience. Now that we have put our people first, and the best people give us cross-pollination of ideas due to their exposure to various domains. All the initial hiccup is almost over, be it in the form of capacity constraints, low margin products, API challenges, and we are now moving towards more number of registration with a new introduction of complex generics. The details of which, of course, COO will present next. The creation of various divisions such as API and formulation R&D, regulatory affairs, CRO, helped us to finalize close to 150 to 160 products for our future registration in various countries of Latin America, such as Chile, Peru, Colombia, Mexico, Brazil, in addition to our existing markets. We also have plans to get these products registered in South Africa and Russia. Now that we are also in the process of creating a centralized warehouse to beat the stockout situation in Central American market, and also to handle the effective deliveries for the new markets too. This will help us to efficiently handle the supply chain constraint and increase the business while reducing the demand side shocks. With the help of our R&D, we will also eliminate the low margin and non-critical generics, and our focus will be shifted to unique products to ensure more profits, as the competition for the same will be few and far between. Number 5, business model differentiation in the bigger geographies. Tender business is the major mainstay in all these bigger geographies. Hence, we will also focus on tender business in addition to our core competence of concentrating on the private markets. Our entry to API manufacturing will also help us to get into this business in the near future. Number 6, our focus will be on the following. A, micro-focusing to create an employee and customer experience. We are one of the very few companies which offers ESOP at par rate. Today, if the share is quoting closer to 500 rupees, the ESOP is offered to our senior executives and some of the contributing employees at the rate of 2. That way, we are in a position to attract and retain the talent that creates the employee experience. And to create the customer experience, since I have told you the business model and the way in which we have created the stickiness factor, that itself shows actually we have created the customer experience at the bottom of the pyramid in Latin America. The macro focusing is staying solvent in the years to come too. D, enrollment of new people for projects, R&D and manufacturing to update and upgrade our systems. C, creating new revenue streams every year to achieve sustainable progress. D, low-cost manufacturing, in the sense making our system more efficient in the area of purchase of raw materials and changes in various processes, which includes existing formulas of the product that we sell in Latin America. Now, let us look at our plans for new projects to achieve the growth in the form of geometrical progression in the next 24 to 30 months. Now we are sure of creating a cash resource of 350 to 400 crore in the current financial year, and the same will be deployed as follows. Number one, a general category facility for regulated markets in the form of tablet, capsule, ointment, and maybe liquid orals. Number two, an oncology facility for oral and injectables for regulated market. Number three, hormone facility for injectables, orals, and semi-solid. And I hope you are aware there are not many injectable facilities for hormone available in the country, especially for the regulated market. Number four, PNM facility for regulated markets. And also, it will not be out of place to mention that our 10x healthcare portal shows continued traction in generating business through retail pharmacies in places where our boys are not able to reach due to COVID-19. Finally, our major goals in the form of truly novel alternatives. A, KSM to finished products. KSM, when I say, is the key starting material. You are aware the country also is focusing on import substitution rather than depending on the import from the country in the form of 70 to 75% of the import comes from China. Hence, the focus is more on intermediates, key starting material, intermediates, APIs to finished products. This will become an end-to-end technology platform for Caplin. And you're aware that we already have an end-to-end business model that we will expand our marketing subsidiaries, which will not only import and distribute, but will also go for the last mile. The C, digital intervention. B, will also go for a meaningful acquisition from the internal accruals with a second wave of cash reserves in future. Gentlemen, the world is full of fighters and pushers. If you have low profile, the competitors will work all over us. The competitors will walk all over us. The steps that we take now is for the real business transformation by leveraging the business opportunities. We believe in making money with respect. When others invest when others invest time and money, we have invested our life in the toughest parts of the world to create value for Caplin. Thank you. Thank you very much. Now it's time to the next gentleman.
Thank you very much, Chairman. Thank you. So I will give a little update on Caplin Steroids, the US business, as Chairman was saying. So we continue to see decent revenue pickup in the US. So when we compare the first half of last year versus first half of this year, our revenues have gone up by about 30%. On the same angle, the milestone revenues that we received last year is higher than this year. That is in line with our strategy that we will only be signing non-exclusive distribution deals in the US because we are planning to have our own front-end presence over there shortly. For the filings for this year, we have done about 3, and we've done about 4, and we will be doing 1 more before end of this financial year. What has happened is because of COVID, we've had some shortages in terms of men and material supply. We've had some restrictions over the last 6-7 months, but thankfully, in the last 2 to 3 months, we see that that has changed significantly, and we have almost at about 90-95% manpower today. And our qualifications, expansions, and everything in Caplin Steroids has been completed. Our scale-up and exhibit batches, which is basically the last stage before filing an ANDA, has once again resumed, starting from last week. So our filing target for the next 12 months is we hope to file at least 14 products. Ideally, it could have been about 10, but 4 products that were pushed over from this year, we will be combining that with the next year also. With regards to capacity expansion, as I was saying, we have completed it, and there are 2 more expansions that are pending to be done. This is getting into the premixed bag line. The machine is getting manufactured, is getting fabricated in Germany right now. It should reach us sometime in early next year, and we are hoping to start taking trials and qualify the machine by end of the first quarter of next calendar year. We are also putting together plans to get into pre-fill syringes. This has been a very niche area, and we've got very good expertise within our R&D on many pre-fill syringe products, not only for the US but also for other countries like Brazil and Mexico. So we are trying to put that also in place within the first half of probably next year. With regards to markets, I think many would have questions about what kind of slowdown was expected. And yes, because we are a hospital-based manufacturing product, right? We are manufacturing hospital-based products. So when it comes to that, because of not many outpatient services that was happening in specifically in the US between the times of, I think, around March to around September of this year, there was a little bit of a lull in demand, but we see that has gone back up. Right now, the demand is coming back, and I think when it comes to forecasts from our partners, they also see that despite the second wave coming in, the outpatient services has not stopped. So we remain hopeful that we should be in a position to finish the year strongly. In terms of pricing, as you all know, yes, there is a little bit of pricing erosion in the US year on year, but for many of the products that we are doing, it has stabilized. We have not seen specific products being, showing more erosion or anything like that. With regards to backward integration, as Chairman had explained, we have all completed the detail engineering and design drawing for our API plant. This is going to be near our injectable plant in Chennai. We expect this to be completed by 12 to 15 months from now. And this will be catering to not only the US markets, it will be also catering to the ROW markets. We have made some last-minute changes to the plant to expand capacity a little bit more, that we can simultaneously do 3 products at the same time. We expect to file our first ANDA within the next 12 months. And this will be done through a contract manufacturing company. And then the idea is once our facility is ready, we bring that back into tech transfer that back into our own plant. In terms of complex products, as we have mentioned in our press release, we have signed 3 agreements with partners in the US. The 2 of them are for complex injectables, and 1 is for an ophthalmic suspension. We expect to file these products in 18 months, and then hopefully the approval happens within 30 to 32 months from now. These are products that don't have any competition in the markets right now, but we hope that it remains that way, or with very, very minimal competition by the time the products are out in the market. With regards to non-US countries, as explained in our press release, we are about to sign agreements with a couple of companies. One of them is our existing partner that has a presence in Australia also, for 3 products there. And then with a new partner in Canada, he's one of the top 3 companies and one of the fastest growing companies in Canada. We are going to sign with them for about 7 products. These are not new products, by the way. These are our US products that we are basically extending it to non-US markets. And as Chairman was saying, our business has always been about end-to-end. So on the one side, we're getting the backward integration, and on the other side, we want to fast-track our entry into the US. We see that there is significant opportunity there to increase our margins and increase our market share potentially. So when we had initially envisioned something around 24 months, we are probably going to speed that up and move it up by at least another 6 to 8 months from now. So we expect having a presence in the US by middle of 2022. Apart from that, everything else is going on. We will likely see that once the next wave of projects has been filed, we will start looking at much more complex number of products, and then the specific number of products per se will start to come down. We will not be filing 15, 20 products a year. We will be focusing on about 6 to 7 products, but products that are difficult to manufacture, which sees much, much less price erosion in the US. And we are trying to take whatever measures that are necessary to make sure that we are not depending only on the US from this facility. That's why we are putting together plans in place where we are getting into Mexico and Brazil and Canada and stuff from this plant, which would be additional streams of revenue, hopefully in the near future. So that's about it from the US side. I think this might be a good time for us to open the floor to questions, please.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Any participant who has a question may press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Aditya from InCred Asset Management. Please go ahead.
Hi, good morning, and thanks for the opportunity. Vivek and Mr. Paarthipan, I hope you guys are doing great. So a basic question on the capital allocation. Caplin Steriles, we obviously have big plans in the injectable market in the US, and I also read in your investor presentation you are putting more capacity for oral solids as well, and you also spoke of your front-end presence in US, in the middle of 2022. Basic question, when you look at the other pharma companies doing this business, the US business, it doesn't seem that those companies are able to be immensely profitable, to be honest. I mean, if you look at some of the larger peers in the Indian pharma industry, they get a majority chunk of their revenue from US, but the percentage of profit they make from that geography is actually quite low as per what they tell us. So with that backdrop, how wise or how well thought of is this US entry? I understand scale, that market being the largest market, you can get scale in that market. But how do you, think about the profitability in that market?
Yeah, I will take this question and then I'll pass on to Chairman also for final comments. So, in the US, with whatever little knowledge that we have, everything goes in cycles. Right? When we're talking about our envisioned entry into the US, that was sometime around 2010, 2011. And at that time, obviously, everyone wanted to get into the US because there was huge amount of shortages and there was a demand and supply gap, and then everybody wanted to put in plans to get into the US. But of course, most of it was in oral solid dosages. Injectables, I think even today, you see much lesser competition. In terms of pricing, yes. So we get asked this question quite a lot, right? So when you're comparing, I think 10 years ago to now, it is a different space, of course, because most of the companies, especially Indian companies that were early entrants into the US, they were used to making 5x, 6x kind of margins. That is agreed. But even today, I would not say that the margins are low or anything like that. The products that we are doing, the lowest margin products that we are doing, if you take out our expenses, we are still grossing around 50%, 40 to 50%. And the prices have stabilized to an extent where there is no chance for it to go down further, because then nobody wants to be in those kind of products, So I will accept that, yes, compared to about 7 to 8 years ago also, I think the prices have come down, but I will not say that they are unprofitable. They still remain very much profitable. And if you compare that to our Latin American business, yes, our Latin American business is a little bit different in the sense that we control everything right from sourcing down to selling. And we are trying to replicate that in a small way in the US as well in the coming years. So I expect that our profitability will go up once we have our own front end in the US. But there has always been a demand and supply gap in injectables. There continues to be a demand and supply gap in injectables. So I don't see, this as something that we have made a mistake or anything like that. Whatever that we envisioned in 2012 was a cycle. What's happening today in 2020, that's a cycle as well. So we need to make sure that we are putting together some plans in place that makes sure that even though we are not the earliest entrants, we need to make sure that as a late entrant, we are one of the last ones remaining sustainable in the markets in the longer period.
I would like to add some more points to here. I'm sure you are aware that US is the number one market in the world. And if you observe what has happened actually to the number one and number two generic companies of US, and although it's better to actually mention the name so that it becomes easy for you to understand, the number one was Teva and the number two was Endo. They were the number one and two, and today they are not the number one and number two. They have given way for other players actually to make it in US. Why I'm telling this one? What will happen actually after a point of time? People who are actually doing maximum business, one day their overheads actually will increase, and they have to think of leaving the generic and get into specialized areas. Today we are the last man standing, which means last one to get affected or the least one to get affected. Because I don't think there will be enough number of people of our size who will get into US market. This is one of my humble submission. Number two, we have not been leveraging the debt. Everything, whatever we have invested in the form of capex and opex has come from our internal accruals. So which means even if it is slightly delayed for 1 or 2 years, we can withstand and we'll make it. Number three, you are aware that Fidelity also is a 25% partner here. In fact, the other day I said, coffee never know, it will taste nice and sweet before it met sugar. So the role of sugar is played by Fidelity today. If Fidelity does not see an opportunity in Caplin, they would not have invested also to that 25%. So this is what actually few things which I would like to convey to you, sir.
Thank you for that comments. So just, on the comment that Vivek made. So Vivek, I agree with you. The gross margins would be 40-50%. The concern that we investors have had historically with the US market, and you're right, it goes in cycles, but the last 4-5 years has been a down cycle. And in that down cycle, what we have seen is despite 40-50% gross margins, and if you take the R&D expenditure that you have to incur to keep the engine running, and then if you account for the gross block for the assets that you build, and then if you account for the working capital, which is very high inventory and debtor days, if you incorporate all of this, the return on equity you end up making on that business, which I guess we will come see from your Caplin Steriles, financials. The return on equity has been really below cost of capital for most of the companies that we have seen in the last 5 years. So that was just a limited point, and I hope you guys do very well. On the injectable side, again, if I just look at the number of competitors who are building capacity, I understand it's a segment which has shortage today. I understand it's a segment which has had shortage for the last 10 years. But if I just look at the amount of capacity chasing that space, so again, you can count on your fingers all the large pharma players in India. All of them have been building injectable capacity. Compliance obviously is a challenge, but as and when these guys get compliant, they can't remain non-compliant forever, right? So as and when these guys get compliant, there will be a glut of capacity coming to flood the injectable market. So how do you sort of choose your products when you look at a pipeline? How do you choose your products?
I would like to answer to this question first. Yeah, sorry. I would like to answer to this question first. I fully agree with you that we will not be in the position to say that we would make it in a very big way in US. But as long as there is no debt, as long as we have the capability to withstand the pressures that we are facing there, one day or other definitely we will make it. On top of it, what we are doing today, we are getting into the bigger geographies of Latin America, which is our forte, like Mexico and Brazil. So while most of the companies concentrate on the tender business, we will concentrate on the private market. Today, we have around 500 to 550 people working, the Latins working actually in South America. Even the biggest companies, except 1 or 2 who have the factory in this part of the world, they don't have this amount of people. Why I mentioned this one, these people will help us actually to expand in this type of markets without taking people either from India or from actually the local market. So we have certain advantages. We will use the advantages that we have in South America. That will definitely help the company, help Caplin Steriles to strengthen the bottom line.
Fair enough, sir. So just one last question. When do we... Sorry, go ahead, sir. You were saying...
Please, sir. Please go ahead. Please go ahead.
Okay. So one last question. How much is the capital expenditure we are budgeting for the US market over the next 3 to 5 years, if you have made a capital plan there?
Which I would ask Vivek to let you know. Yeah, please.
Yeah. So in terms of capex for the next 2 years, we are pretty much done with most of it. Like I said, whatever that we are doing from now is incremental capex. The premix bag line that we're getting into, that's going to be at a cost of around 9 to 10 crore, and the PFS line as well would be something similar, around 6 to 7 crore. So very large capex. We don't have any plans over the next 2 to 3 years, unless something changes drastically. But we feel that whatever expansion that we have done so far is good enough for the pipeline of products that we have till 2024.
Right. And I also saw your R&D budget moving from 6 crores to 36 crores over the last 6 years. How would you forecast your R&D budget over the next 2 years, Vivek?
See, as the chairman has explained during his call, in the initial periods, we were going after what we internally call as guerrilla marketing. So today we are a company that embraces technology, and we know that the path forward for us, especially when we are getting into niche areas such as hormones and anti-cancer and anti-psychiatry products and all that, we need to embrace R&D as much as possible. In terms of numbers, I would say that probably whatever level that you're seeing the R&D at right now, this is likely to continue. Yes.
Perfect. Yeah. Thanks a lot and all the best, gentlemen.
Thank you. Thank you very much, please. Thanks for your questions.
Thank you. We'll take a next question from the line of Vinayak Mohta from Augmenta Research. Please go ahead.
Hello. Yeah, good morning, sir, and congratulations on a great set of numbers. I had one or two questions. One was, what can, in future be the contribution from the US as a proportion of total revenues? Maybe like somewhere 3-4 years down the line.
Yeah. What we have given out in the past is that in the next 5 years, we expect the US to contribute to around 30% of our overall revenues, 30 to 35% of our overall revenues.
Okay. And so second, I saw in your press release you had somewhere mentioned, there's a possibility of a acquisition or greenfield expansion in India or Mexico. So any color on that? Within what lines are you looking for an acquisition, if it would be?
Yeah, I'll just request Chairman to take this call.
Yeah. The acquisition in India, probably in the API area. The acquisition in Mexico, today, of course, it has to be a meaningful acquisition. First, we would look at it in the form of a liquid and ointment facility for which you don't have to go for clinical studies. So if we come across something like that, yes, we'll be in a position to go for it. Number two, we also have plans to go for a CRO there. We have a CRO in Chennai. The bioanalytical will remain in Chennai. We only have to go for a clinicals there. So if we also get a company with a good number of registrations, then there is a possibility for us to actually acquire a company in Mexico too. It all depends. It all depends upon the timing. And as I told you before, it should be a meaningful acquisition.
Okay. So just to follow up on this, will it be, if in case the acquisition comes through the funding, it would be through internal accruals, or you would be looking for a mix of debt and accruals?
In fact, today we think of only internal accruals. If we find something extraordinary, then we may think of actually a mix of debt and equity both.
Okay, sir. Thank you so much. That's it from my side.
Thank you, sir. Thank you very much.
Thank you. We'll take a next question from the line of Hardik Shah from Prabhudas Lilladher. Please go ahead.
Thank you for giving me the opportunity, sir. So my question is just an extension of the previous question. So, sir, what will be the break-even levels of revenue for the US business, and by approximately how much time will be able to achieve that?
Yeah, we feel that the minute we cross around 125 to 130 crore in Caplin Steriles, that will be the point where we will probably do a cash flow break even. In terms of timing, of course, with COVID still progressing here and there, we don't want to give it a very finite number, but we hope that over the next 18 months we cross that threshold.
18 months. Okay, sir.
Yes. Correct.
So my second question is with respect to the Latin business. So now, sir, have we finished the process of acquisition of the channel partner, sir, or is it still pending?
We almost completed the channel partner acquisition, and we don't have anything in the near future. Maybe if you come across something very interesting, we may think of it maybe in the next financial year.
Okay, sir. And sir, will you be able to share the total amount of cash spent on this acquisition?
It's already, I think, I will ask the CFO to answer to your questions, please.
Yes, good morning. This is Muralidharan. We have already shared the details in the annual report. it's about 2.66 million is the acquisition for one of the major. We have had a mix of processes. We have invested into some companies. We have bought over the shares of minority shareholders in some companies. It's a mix of both. So we have invested on par value of whatever is the net worth on the day of their acquisition.
Okay, sir. And sir, as on date, do we have any COVID-related products in our portfolio, sir?
It's only on the immunity side, like vitamin, nutritional products. But most of the COVID products are repurposed drugs. In fact, we developed one product, then we decided not to pursue because it's not that promising, to be very honest with you. Today, people who survive, we don't know whether they survive because of the drugs or because of the immunity or because of both. So when such is the case, there's no point in going for a product whose life may be, limited. Hence, we have not been pursuing anything like that.
So, sir, is this the same product you are talking about for which we were expecting our approvals?
No.
This is Favipiravir, Favipiravir. We developed this product and then, we didn't pursue it actually for the commercials.
Okay. And sir, we have already filed for approval for some COVID-related products also, right, sir?
So this is a COVID-related hospitalization product, and we are expecting approval for it in the next coming months, hopefully. And this is basically an anesthesia drug, and this is in the US.
Okay, sir. That's all from my side. Thank you so much, sir.
Thank you very much.
Thank you. Our next question is from the line of Shrikant Akolkar from Ashika Stock Broking. Please go ahead.
Hi, good morning. Thanks for the opportunity. Last quarter, we talked about 10 to 15% cost reduction for top 10 products. So if we can get where have we reached in achieving that kind of cost reduction?
I would request the CFO to take this question.
Yeah, actually, what we mentioned last time was when we get into our own API manufacturing, that will result in. Chairman was mentioning about two products which contribute 20% of the sales. We are working on the API ourselves, backward integration. So that is when it will happen. That get to fructify. Despite that, the gross margins have improved compared to the last quarter because of the value-added products being introduced. And the operational expenses have stabilized as compared to the previous year. There was a spike in the last couple of quarters that has been stabilized. And as a company in India, our operating expenses have been very much under control, and we have reduced a lot of expenses. This will all add to the profits in the coming quarters and years.
Okay.
And specifically on that question, Shrikant. So this is an ongoing process, right? So typically, what happens is you will start to see that the benefits accrue to the company probably in 3 to 4 quarters. So these are, of course, easy gains for us because these are all approved products and we have the technology to get into the backward integration of it. But these are very large scale kind of API. So it will take at least 4 quarters for us to see. It takes time for us to see that benefit into numbers. But anyway, we are still also working on reduction of the acquisition costs as well. Acquiring the API is the key starting materials and stuff. We are actually working quite aggressively on that as well right now.
Okay. And another question is on the bag line and ophthalmic line. So when realistically do you think that we will start commercialization? And what would happen if we're not able to get approval soon, as in what will happen to the next year's internal projections?
Yeah. Ophthalmic will be much faster because we are talking about, we've already filed an ophthalmic product in the US and we were supposed to have an inspection in June, but obviously with COVID that hasn't happened. We are remaining very bullish on ophthalmics because this is an area that is not very crowded, number one, and number two, the pricing also seems to be largely stable, We have in our pipeline at least around 9 ophthalmics, of which 4 will be filed in the next 8 months. So in terms of premixed bag line, this will take a little longer. The machine itself is likely to reach us only by February of this year. So we might be filing our first product in the US by end of next year. So in terms of commercials that we can expect from these two lines, I would say end of 2022 for ophthalmics and end of 2023 for the bags.
Okay. And if I may ask another question, is on the working capital. So we have seen higher inventory levels and receivables after we acquired distributors. So when we can expect normalization of working capital?
Okay. Here, let me give you actually an answer to this question. If you look at actually the business of various companies, it differs from one company to another company. Our business is something unique. I would request you to look at it here. In all humility, I claim that probably ours is one of the few or the only company to achieve a business of say around 1,000 crore in the current year, mainly from the ROW market for generics. So when such is the case, what happens? There are times you will have to keep the inventory closer to the customer. Then only your cash flow will be faster and good. That's the reason I even told you in the last 6 months, we were in a position to increase the cash flow by 180 crore. So sometimes if the goods is the inventory is more, that doesn't mean the inventory lies in Chennai. The inventory is there in the market. The receivables, of course, the receivable doesn't actually, I think it's at 94. Do you feel it's still higher? Receivable is at 94 days. Do you feel it's still higher, please?
I particularly wanted the question on the inventories. We have after we acquired distributors, then there was spike, and then what we understood that in 6 months it will normalize. So specifically on inventories, if we can get.
Excuse me, this is Muralidharan.
Yeah, I will ask our CFO.
What Chairman has told, inventory has got more than 3 parts. One part is the raw material and semi-finished goods, finished goods lying in our manufacturing facilities. That has not gone up substantially. The second part is the inventory in transit, because it takes anywhere between 45 and 50 days, depending on where it goes, from India or China to reach the end destination. From then on, it will take another 15 days before the goods are made available to the warehouses, because customs clearance, quality, all happen. So 60 days is already taken in transit time. Then the goods have to be sold. So if you see, the inventory has come down substantially. 60 crores has come down in the last 6 months. When we said normalization, the question was relating to the contribution margin. What we said was the Q4 of last year, the contribution margin dropped by about 3 percentage points because of 2 reasons. One, we had to sell certain products at cost because of the government request on COVID-related products. Second was on our subsidiary is selling the products at pre-acquisition cost. That is gradually coming down. The normalization is already visible in the H1 contribution margin, going up from 52 to 55%. That is what we mentioned. Normalization is a process which will take at least 4 quarters. Once the pre-acquisition stock is exhausted by the market, this will get, either we will stand at 55 or 56% is what we are confident of.
Okay, understood. I have a couple of more questions. I'll join back with you. Thank you.
Please. Thank you.
Thank you. We'll take a next question from the line of Nikhil Upadhyay from Securities Investment Management. Please go ahead.
Yeah, hi. Good morning and thanks for the opportunity. I had 2 questions on the standalone, on our the LATAM part of the business. Now, if I look at it, over the last 6 months, there has been a significant reduction in the receivables, and I think that's a good thing which we have seen, and a strong cash flow generation. If you can just help me understand what has helped us in reduction, because as I understand that when we were buying from the distributor, we were buying out the distributors, the money would have been released as the retail stockist inventory gets liquidated, which would have meant the receivables would have increased. So is it like now the business is stabilizing and this is the receivable days which probably will sustain, or if you can just help me understand there.
Yeah. I would like to answer to your question. See, there are 2-3 reasons to it. Number one, we are increasing our registration, especially products which are very complex. See, initially, as I told you in course of my speech, we went with the simple vanilla generics. Today, we have the best of the best R&D. Hence, we are in a position to register products for which the competition is few and far between. So when we go to the market, they are in a position to understand that we are very uniquely placed. Then we also demand, if you want this type of products, you'll have to pay us. That really helps us. One is actually the unique products. The number two is actually the range which we have. Number three, of course, even the COVID situation also has helped us to a certain extent because we kept the goods closer to the customer, as I told you before. These are the three reasons that really helped actually the cash flow.
Sir, just continuing then, please. Probably the third part of the reason which you have mentioned may not sustain on a longer term. So, probably these receivable days of the significant reduction in receivable which we have seen, I
got your point. I'll give you the answer to it. As I told you before in course of my actually speech, we are preparing 150 to 200 actually dossiers now. These are from various categories such as oncology, hormone products, psychiatric and neuropsychiatric, and PNAMs, as I told you before, in addition to the generic products, generics that we have in the market. Even COVID or no COVID, the way in which we are registering the products is more of actually the new products and complex products that will increase the volume of business, increase the cash flow, increase the profitability. Only issue, it cannot happen overnight, it will happen actually 2 years from now.
Got it. Okay. Secondly, sir, on latent part of the business, now one of the things which I understand, with the reason why we were able to make such a high margin were because we had a lot of a mix of outsource come in-house production where outsource was much larger. Now, as we are going for increasing production of putting the API plants and bringing in-house production, it's purely on the latent part. Do you see there could be escalation in the cost, or on the revenue line also you see there is some set off which we can get, as a result the margins can sustain?
I would like to answer this question this way. I hope you are aware the world is moving towards a new direction in the form of regulations are changing now. Maybe 10 years from now or 5 years from now, there won't be anything in the form of unregulated. Most of the countries will be regulated. When such is the case, it's not easy to outsource and export products and make money. It is true, ours at one point of time, when things were different, it was an asset-light model. We used the advantage of outsourcing. Even now we are doing it. At the same time, we should, if you look at most of the big companies, they allow all this, in the form of backward integration, front-end persons, formulation R&D, API R&D. It will be in the form of injectables, OSD, and then CRO. That is what we are also trying to do, because our focus in future is going to be for the bigger geographies. When we go for the bigger geographies, they will always insist for inspection. When somebody inspects the facility, if the facility is not your own, there is no way you can control the quality and integrity in other people's facility. So with all this in place, we are bound to go for our own facilities. I do agree with you. We have to balance between consolidation and expansion. We have to also run the companies at what cost we are running the company also is important for us to understand. And we are very confident we will do it. Whatever mistakes we have done in the past also, we will not repeat it in future. We will do it in an effective way. Definitely there is a dip or dent in our ROC or our CE. But 5 years from now, I am very confident we will become a force to reckon with.
Sure, sir. Yes. Thanks a lot.
Thank you, sir.
And best of luck.
Thank you very much.
Thank you. Our next question is from the line of Sachin Kasera from Swan Investments. Please go ahead.
Yeah, good afternoon, sir. My first question was regarding this new project that you announced in Chennai, for which you already purchased the land. Your press release mentions some 4 or 5 projects that you are putting up. Can you tell us what is going to be approximately expenditure on these 4 or 5 projects?
As I told you before, we are in the by the end of this year, we'll have a cash reserve of 350 to 400 crore. And when we estimated, and we took our senior technocrats into account along with the finance and purchase people, this will not exceed 350 to 400 crore. And in addition to that, next year we are also likely to generate cash on top of our capex and opex. So that probably will use it in the initial stages for the operating cost of some of the facilities will go on stream also. So we don't foresee any major challenges, and we'll be able to complete all these projects, whichever we said actually, within this 350 to 400 crores.
Sure. Secondly, sir, you just mentioned in the previous question that the return on capital and return on equity has come down from 60-70% to 30%, and that should improve as we go ahead. So from a 3 to 5 year perspective, what do you think is going to be the improvement in ROC? You think we can again go back to this 40-50% levels, or this 30-35% is the new normal for us?
Rather than giving the numbers, one thing I assure that we will be very, very comfortable. You can, at that point of time, apple to apple, if you compare with any other company, yes, we will be either equal to some of the best companies or slightly more.
Sure. Just a couple of questions for the CFO. When we see the reported numbers, there's a minority interest of around 5 crores. So if you could just tell us what does this pertain to? Does it pertain to Caplin Steriles, or it's pertain to some of these front-end companies that we acquired? And if you could just give those details, that would be very helpful.
Yeah, this pertains to the current partner in the largest SY channel partners. So that he has a minority stake. This is a quantum of profits assigned to him actually.
What is our stake in this?
Sorry?
What is our stake in that company?
Are you able to hear Mr. Murali?
No, yes, sir. I am not able to hear. His voice is not clear, sir.
I'm saying, what is our stake in this partner? We don't own 100%. I thought we used to own 100% all the partners.
No, this is 69%.
This is 69% is our stake. 31% is the stake of the partner.
And let me also add one more thing here. See, this country, we went to this country like 14, 15 years ago. When I went to this country, I took my eldest son actually. He was hardly 20, 21 year old. And this guy who is still there, he is one of the architects of our actually company. And we have some emotional connect. This is a guy who worked with my son, worked really hard. And he's also instrumental for the success of this actually company. Hence, we could have even bought this stake. And on the contrary, we want to retain him for some more time so that, we don't stand to lose anything. What is important, see, after all, we're all foreigners, although my son married a local. And we need some protection actually from some people who are ready to work hard and who are ready to sail with us. In other countries, we found, we don't need. But here, of course, this is a place where we do maximum business. So when he wanted to continue, we also said yes.
Sure. And this partner brings in the entire institutional business of this country is handled by this partner.
Yes.
Sure. And this has been consulted only from this quarter. It was not present in the June quarter, this partner business.
I don't think so. It will not be like this in the future quarter, actually. So I don't think so. Anyway, I will leave this to the CFO to talk on that.
I also endorse the point of Chairman. It will not be around the same quantum in the quarters to come. It will get moderated.
No, my question is, sir, was this present in the June quarter also, this minority, or it has come only from 1st of July in the accounts?
As we mentioned last quarter, the business mostly from the pre-acquisition stock and the profitability was not that high. This quarter, the profitability from that country is higher. That is why it has happened this quarter. And depending on the future business, it will happen.
Sure. And sir, can you share with us the number of Caplin Sterile for the first half, how it has done?
So Caplin Sterile, we have completed around a little over 30 crore for the first half, which is a similar number to last year. But the one point to take over here is in last year's first half, there was almost 20 crore from only one milestone with Baxter. So it's not a like-for-like comparison. If you look at only revenue per se, we've increased by almost 30%. So we are hoping to end the year well, because we have 3 launches that will happen in the next 6 months. So we are hoping to end this year well. Yeah.
And how much is the licensing income in this 30 crores in the first half of this 30 crores?
Sorry?
Last year you mentioned almost 20 crores was the licensing income. This year first half of this 30 crores, how much is the licensing income? How much is the actual manufacturing revenue?
I believe this year it's around 10 crore only is the milestone income, which is half of last year. Last year was around 20 crores, the milestone income for the first half.
And you just mentioned in one of the queries that, we are looking at 125 crores, we look to break even. That should happen in the next 18 months. So is there some slow in terms of that? Because I think initially we were looking at achieving this number in FY21 itself. So is it that because of some slowdown in US or some delays we are
COVID issues too?
So it is not nothing to do with slowdown in the US. So I see when we made this statement that we are likely to almost double the sales this year, that was in March, right? So we had the assumption that by June we would have completed our expansion qualifications and everything, and we would have been commercial on these 2 lines. But obviously that has not happened because of COVID-related, man and material movement restrictions. It got pushed out to November. So because of this, we missed out on some commercial revenues. I would not say missed out; it got pushed out to the next few quarters. So I would say there is around a 6-month push in our initial target. Yes.
But will H2 be far better than H1,
sir? We will beat last year's number very comfortably. In fact, we have gone very close to it already. But will we double our sales from last year? That's not likely. That's not likely to happen. But we will very comfortably beat last year's figures in the US.
Okay. And just one last question, sir, on the employee cost. Because of this consolidation and new capex, the employee cost has gone up quite a bit. So is this a new run rate, or there's going to be some more increase in employee cost before it stabilizes?
Hello. I would request the CFO to answer to your question.
Yeah, the employee cost as compared to the last quarter and current quarter is more or less same. We expect that to be around the same level. Except that normal periodical increases will be there, and then when the projects go on stream, there will be additions to the project. Employee cost will be there. As of now, the current business model, the current employee cost is sustainable.
Sure. Thank you very much.
Thank you.
Thank you. Our next question is from the line of Sridhar from PCA Securities. Please go ahead.
Yeah, thanks for the opportunity and congratulations on a solid set of numbers. On the US centric front, I have 2 questions. Firstly, you said you expect to launch 7 products. So can you please give us some color with regards to the addressable market size and how many of these could be limited competition products? And you seem to be putting a lot of weight behind the premix tag. So some color on the potential there would be helpful. And finally, on the API front, you said that you have kind of developed 26 products. So if you could give some indication there in terms of how many are high volume products and how many are complex, that would be helpful. Thank you.
Yeah, I wasn't fully. I mean, your line was not very clear, but anyway, I think I got most of the. Yeah.
Yeah. Sorry, Mr. Sridhar, your audio is muffled. So if you're on a speaker mode or on a hands-free mode, switch it to handset, please.
It's okay. I think I got most of the queries anyway. So on the launches, yes, for the next 6 to 7 months, we have about 7 launches planned, of which 2 are already approved and that we're about to launch before December. And the others are new approvals that will be coming in. In terms of the API plant where you had asked, so that 26 products we had spoken about, 14 of them are for backward integrated API for the US, and the rest of it is for ROW market. So as I had mentioned during the initial comments, we have increased the capacity in the drawing stage itself in our API plant, so that will be handling both ROW and US APIs in the same plant itself. In terms of volumes, see, as a principle, we don't want to take up huge volume APIs. We sort of want to play on the value rather than the volume, and we will be going for only niche APIs that we already have a front end for in the way of a formulation. We will not be going for very me too kind of generic APIs. No.
Yeah, I would like to add one more thing here. If we aim for a high volume actually API, then it's not easy to actually go for a KSM, key starting material in India itself. So the best way to control actually the technology platform is to go for a low value API, such as APIs that we are planning for our injectables in US market, maybe for the oncology, maybe for the hormone. Then even if you develop some 50 to 100 products say in the next 4-5 years, then it becomes end-to-end in the form of technology, the way we have created actually end-to-end business model for marketing.
Yes, sir. I mean, that leaves the question regarding the addressable market size for the 7 products and the opportunity for premix bags.
Your voice is not very clear, so
yeah.
I think I heard something. Yeah. Can you repeat, please?
Yeah, that's right.
No, your question was not very clear.
Yeah. I wanted to know the addressable market size for the 7 launches that you expect in the second half.
Okay. So addressable market size. So we would like to get into that. See, for the approved products, one of them is a $28 million molecule and the other one is $35 million. But for the products that are not yet approved, we don't like to get into addressable market sizes now because, as you know, it's a bit of a dynamic situation in the US. So we would like to get into addressable market sizes as and when we get approval, which is what we have always been doing in the past also.
Yeah, I mean, yeah, that is one question which I'd asked. That is the premix bags. I mean, since you seem to be emphasizing a lot there, so if you can give some color regarding the kind of potential you see out there.
Yeah. In terms of premix bags, this is one of the areas which has limited competition, whether it is in India or overseas. There are some companies which are very, very large in this, such as Baxter, Fresenius and all that. But that is more in terms of parenteral nutrition and large volume infusion. So in terms of premix bags, this is basically a diluted, ready-to-use version of a vial. And what it does is basically reduces the number of steps that a healthcare worker needs to take while administering the product to a patient. So there are multiple complexities with regards to maintaining aseptic area very well and also sterilization of the product and stuff. So we feel that we have very good internal capabilities in our R&D for this. And in terms of India, there's hardly probably 3 to 4 companies that are manufacturing premix bags. So we think this could be a good lucrative area for us. Yes.
Any indication about the potential, the size of the opportunity?
No, again, we have not even filed the product, right? So we're not going to talk about the thing right now. But our overall pipeline is quite robust. We've given it in our presentation yesterday as well that we are working on an overall pipeline addressable market share of around, addressable market of around $2.8 billion.
Okay, thank you and all the best.
Thank you.
Thank you, ladies and gentlemen. That was the last question. I now hand the floor back to the management for closing comments.
Yeah, thank you. Thanks to Centrum, thanks to Cinderella, and also ENY for organizing, and thanks to all the participants for all the questions. We look forward to further interactions with all of you in the next few months. Thank you very much.
Thank you. Thanks to all of you. Thank you.
Thank you. Ladies and gentlemen, on behalf of Centrum Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.